Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Look at the Taiwan index managing to hold on to gains of 1.23%. We have Hang Seng holding on to gains of around 0.6%.
It is my responsibility as telecom minister to protect my consumers.
Support is the 20-day, which is 25,910. For the Nifty Bank, we set a record at 60,114. Pairing those losses, 0.18 down now, 26,130.
Watching the 90 mark very importantly, because if that breaks, stop losses can get hit further.
Our drug should do about $1 billion or $2 billion.
Markets at around that 26,100 mark, easing off from record highs earlier.
जिस तरीके से अपने फोन पे दूसरे ऐप को दबाओगे और कहोगे डिलीट, वैसे इसको भी दबा सकते हो और कह सकते हो डिलीट.
What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level.
Another day in the red, and the low today is 26,030, so we're very close to the day's low as we speak.
Well, that is the day so far. Markets, of course, are not looking all that great. 140 points lower on the Nifty. This is closing bell. Broader market still reeling. Advanced decline is pretty negative. We are coming to you from the CNBC-TV18 News Online studios. I'm Prashant. With me, my colleagues Surabhi and Rima. Guys, hi. Afternoon.
Hi, afternoon. Looks like currency jitters once again are keeping the traders on the edge. A new record low on the rupee against the dollar, 89.95. And courtesy that, we've extended our decline now for the benchmark indices for the third day in a row. And we're still pretty close to the day's low. The day's low on the Nifty was 26,028. We're pretty much there, 10 points up from that level.
Yeah, absolutely. And what also kind of hurts is the fact that we're kind of singled out in this downside action today, because otherwise a lot of Asian markets have actually closed positive. And things are up and about. In fact, if I check US futures, then they're mixed. I mean, there's no major slide or anything. So this continues to be what has been an India-specific issue, whether it's the lack of that trade deal, the currency, obviously becoming a big sore spot as well. So, yeah, and the lack of momentum, we've been complaining about that, right, ever since we hit the all-time high. Yep. Conviction seems to be missing.
Yep, absolutely. And I think this is one more kind of drifty, lack of, not a very enthusiastic session one way or the other. Even if you look at stocks, and by the way, only 900, about 1,000 stocks are higher, 2,000 plus stocks are lower. Even, if you look at the biggest volume-led gainers, it's not too many well-known names which are, up and about. There's a Spark and there's a bunch of other names here and there, but it is muted, in broader markets within winners as well. So that's the kind of market we are in. So 26,040. The 200 is still away, about 200, I think almost 200 points away on the downside. And that, of course, is the big support level. The market did run up and run away, but we've been retracing for the last few sessions now. Let me just quickly run you through what's coming up here over the next 60 minutes before we go any further. So markets, of course, in focus. We'll try and understand where from here. So a little bit of divergent moves, right? So financials, IT, private banks are on the back foot. PSU banks, though, are looking a little better. Rupees made a new low, as Rima said. It's now fast approaching 90 levels. We'll take stock of the sentiment there, because, of course, that's feeding through into equity sentiment. It's like a feedback loop of the bad kind. FPI outflows, rupee weakness, and equity weakness on the back of it. So we are seeing some of that play out. Bank Nifty and the weights are calculated, etc. There are changes afoot, and Vivek is going to tell us more about that. So some smaller banks perhaps benefit, the larger ones weights are capped. Details on that. Asian Paints, there's a UBS upgrade which has come through, and we'll get that out in just a bit as well. Let's get the sort of trading action and the overall picture out of the way first, and Mitesh is with us to help us with that. Mitesh, good afternoon. As I said, this is a slow drip feed lower. What's your sense, Mitesh? What should one do?
I think, as I said, I think, we'll get long only if it either gets past 26,300 on a closing basis, or you get a significant decline, which is actually close to about 25,900 odd zones. And that is the time to even look at index positions. Having said that, Maruti is something which I would recommend on the buying side. That's a stock which is doing well. Keep a stop below 16,100. Look for targets of 16,450. And Polycab is a stock which is on the negative or the sell side. Keep a stop just above levels of 7,400, and look for a target of roughly around 7,120.
Okay. All right, let's get to one big story that CNBC-TV18 is picking up from sources. Mastech promoters are looking to sell stake. Rachna joins in with what she's learned from her sources. Rachna?
Right, sources have told CNBC-TV18 that the Mastech promoter group is exploring the sale of nearly 20% stake in the company. Now, this is significant because the promoters currently hold about 36%. So, the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy is the pricing. People in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale and that it has two big triggers. First one is the succession planning, and the other being the broader effort to bring leadership stability after a year of major top deck changes. And that's important context because Mastech has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts. First, Raghavendra Jha came in as a CFO in May 2025, and then came Deepak Kedia, who took over in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset, the one that aims to give the company a steadier foundation as it leans into its next phase of growth. According to sources, the promoters are sounding out a mix of strategic investors and long-only institutional funds. That aligns with Mastech's revenue footprint, where nearly 65% of the business comes from the UK and Europe. The Mastech was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar and the late Sudhakar Ram. As always, we did reach out to the company for a response, but Mastech declined to comment on CNBC-TV18's query.
Okay, all right. Rachna, thank you very much. Interesting story, and we'll see how this plays out. Let's discuss Mastech and more with Dharmesh Kant of Chola Securities. First, Dharmesh, on this, I don't know if you have coverage in the company or not, but interesting development and perhaps turn of events over here. When we speak of Tier 2 IT, I mean, does Mastech figure in your scheme of things at all? Any thoughts on the business, the way it's shaped up so far?
Yeah, Dr. Solvia, I mean, see, this news flow, I think, is not very positive for the uncertain environment in which we are. So when a lot of uncertainties are there, people choose for certain kind of a trajectory, and now this management transition and whoever comes to, take the helm of the affairs and how to carry on the business forward. Tier 2 IT companies are already, huddled with a lot of problems out there. There are few outliers who have been doing well, but majority of them are still struggling to get new business. So we have been focusing on outliers, and thankfully, I mean, luckily we were able to get a couple of them right. I mean, Persistent was there, Coforge was there, KPIT Technology. Those are the companies which we have been focusing on. Lately, we have also, came out with an IC and Orient Pro Solutions Limited. So I think Q3 onwards, even there, the numbers will be, quite better from what it has been. H1 also they did well. 30% plus kind of growth rate, and we are expecting 30% plus kind of a growth rate going forward into.
Which stock, Dharmesh? Sorry, it was a bit of a patchy line. Which stock were you saying you're expecting 30% growth ahead?
Yeah, Orient Pro Solutions Limited.
Orient Pro. Okay.
Yeah.
So now you have Persistent, Coforge, Orient Pro in the stock, IT stocks in your portfolio. Is that correct?
Yes, Rima, that's correct.
Okay, those three. Stay on, Dharmesh. There are a lot of other stocks that are buzzing in trade, and here there is some news accompanying them. Sudarshan joins in with more. Sudarshan.
So I've taken 4 stocks, of which 3 stocks are sharply higher, while 1 stock is under pressure. On top of the list is Spark, which is reacting positively to the US court order related to SESB PRV. PRV is basically priority review voucher. If a company has that, it helps in getting faster review for another drug application once that company files it. Second one is HCC, or say Hindustan Construction Company. It has released details of its rights issue that is worth rupees 1,000 crore, and the price for the same is rupees 12.50, and ratio is 277 rights equity shares for 630 fully paid up equity shares, and the record date is December 5, and the stock is reacting positively to that, and it's up almost 11%, and stock price currently is at 26.60. MV Photovoltaic is sharply higher after company released quarterly earnings, and earnings looked strong on a very low base. EBITDA has increased 4.3 times. Margin has seen an expansion of more than 1,200 basis points. And while talking to CNBC-TV18, management believes that H2 is expected to be much better than H1. One stock that is under pressure today is Bajaj Housing Finance, after promoter Bajaj Finance has sold 2% stake via block days, and after this stake sale, promoter's stake comes down to 86.70, but the overhang of stake sale remains because promoter has been selling the stake to meet minimum public shareholder norms. And also remember, the stock is currently at a 52-week low.
So thanks very much for that. Out of the names Sudarshan mentioned, anything of interest? Bajaj Housing Finance, especially if you have any thoughts, Dharmesh?
Yeah, Dr. Prashad. I mean, see, after so much correction, still the stock is very expensive. It's trading at around 4 times price to book value 1 year forward. And that's always a challenge for any housing finance companies to maintain. Because essentially all housing finance companies cater to affordable housing segment. And there, the pickup is still not there. Be it affordable or mid segment is still to pick up. But premium or luxury segment are doing fairly well. So that's one challenge. Secondly is, I mean, if you look at the Bajaj Housing Finance, there's no strategic investor into the company, no institution or, mutual funds are buying into that. And that's, a point to be noted, because if you are so much stake to offload and then you are not finding a good value buyer, so that's definitely a concern. The valuation multiple, I don't think business-wise there is a concern. Business will continue as 20-22% kind of compounding, but valuation needs correction. If one is looking at housing finance companies, then I still think PNB Housing Finance makes a better attention rather than a Bajaj Housing Finance.
Okay. So Bajaj Housing Finance not quite making the cut for Dharmesh. Since we're talking financials, let's also focus on obviously one big story, which is one of the reasons, not the only reason, one of the reasons the market seems to be under pressure is because there's a churn that's underway with respect to the Bank Nifty. And this comes in from regulatory requirements that basically say that if any index has futures contracts built on it, then that index needs to limit the amount of concentration that big stocks have. So what that's meant for the Bank Nifty is that over the course of the coming several weeks and months, the Bank Nifty constituents will have to be rejig so that the weightages of the heavy, index heavyweights like ICICI Bank, like HDFC Bank, that weightage has to come down. And also 2 more constituents get added, which is Yes Bank and Union Bank. And Yes and Union, both have been Union, at least last I checked, was managing a little bit of a gain. So yeah, and those are the likely inflows. This is as per street estimates. That once they're included in the Bank Nifty, just passive inflows will come into these 2 stocks, Yes and Union Bank. And the number of stocks will also go up from 12 to 14. So this is how it's played out. But I mean, it started with the Bank Nifty pressuring the market. Now it's moved on. Now you even have Reliance, for instance, that's a big heavyweight drag. But Dharmesh, specifically on these changes, these index changes, do you expect it to last? Or this is just a technical adjustment factor? And this morning onwards, we saw some of that adjustment play out on both ICICI Bank and HDFC Bank.
Yes, so it's just a technical adjustment factor. I mean, it will play out and then again things will be back to normal. More of a, algo opportunity for people who track it very closely, and some trading opportunities will emanate from such kind of restrictions which are being imposed. So, I mean, this will just pass on, and I mean, a couple of days after, life will be back to normal for SDFC and ICICI Bank. Having said that, as far as private sector banking space is concerned, what we are focusing on from the valuation perspective and the growth outlook is more on Axis Bank, and I think IndusInd Bank presents a very good opportunity now, given the valuation companies trading on, and if nothing surprisingly wrong comes out, then I think it's due for a value re-rating going forward into the second half of FY26.
Interesting. So that's the Braveheart call on Innocent Bank. Management change done. Hopefully no new issues or regulatory complexities, and therefore it can perhaps the valuation can readjust and come back to more normalized levels. Got that. Interesting points out there. But the other two guys are still holding up. I mean, the two which get added to the Bank Nifty, Yes and Union Bank, they're still holding up in today's environment.
Absolutely. Just one, the Nifty will come up on your screen, and I think we are now 26,000, basically just around 26,000. Just one correction, the 20-day had moved up as of yesterday's close. It's not 25,800, it's 25,900. It's about 100 points away, the 20-day now, given the fall that we are seeing. About 0.6% has actually become a little larger while we've been looking at a trade so far. Any thoughts? Again, it's a bombed out name, HCC, Dharmesh. There was a bit of excitement. I remember a year and a half. They said, well, this entire they're in the constructing. They provide construction services for the nuclear industry. As I remember, that was the last spark which we saw in that name. There's this rights issue now. The other one is KNR Construction. Nimesh put out a list of stocks which have been battered from the highs. That was on Editors Roundtable on Friday, and we had a fund manager with us on the program who said, well, it's worth giving it a look. I think it's down some 50-60% from the highs. If you have any views, these two.
Yeah, Prashad, I think, this market for next 1.5 months will be a market where it will be range bound, and it will give you a FOMO feeling. There will be some news flow coming, maybe even far into the future, and then you will see the stock price going up 15-20%. And that will be the texture of the market to my mind for the next 30-40 days. And such things will keep on cropping up. But I think, Prashant, going by way the economic data points are panned out, particularly the nominal GDP, and then you have the GST collection at 0.7% for the month of September, when things were supposed to be much higher on the volume front and the offtake. So I do think that economy is not that great as of now. So one has to take everything which of salt, and then you have to go with the interested day. And there I still think in the infra space, L&T and NCC, they are the better bet than going out for this, dying out candidates and hoping for them to revive.
Dying out is maybe a stronger word, or maybe a little bombed out in terms of price movement. That is KNR is what I'm talking about. HCC, of course, is I think it's not done well for, at least the stock's not done well for a long time. But KNR, of course, was a surprise one for me as well when Nimesh put that out. It's done, I'll tell you, the high was late 2024, stock was at 400. It's at 150 now, 160, KNR Construction.
Serious value destruction over there coming through. Actually, in a downbeat market, let's also talk about some of the gainers. And one of the gainers is very interesting. It's a new listing, and we spoke with the management just this morning. And we're talking about MV Photovoltaic. Now, they manufacture photovoltaic modules as well as cells, and they're putting up a huge amount of capacity. Capacity is going up both on the module side and the cell side, which means that their debt, which had come down to just 100 crores after the IPO, it will start rising again. But then they're saying that the revenue and the margin expansion will perhaps justify it. Dharmesh, just quickly, I don't know if you saw this company, if you have any specific thoughts on this. Any idea? MV Photovoltaic.
No, so I didn't have a closer look at the financials of this company, so I won't be able to comment on that. Apologies for that.
Okay, no worries. But otherwise, on the solar manufacturers, what's your overall view on Waaree, Premier?
Yes, so Waaree we have tracked since the IPO listing time, and then we had an IC on it as well. And our target price was 38.50, which came, and we closed out an IC. Why we have not carried forward is because this entire space is quite heated. They all are booked for next 2 years, so you will keep on hearing a solid set of quarter and any problem out there. But the visibility outside 2 years is a big challenge. Valuations, none of them are cheap. Valuations are very expensive. And our studies do suggest that Adani and Reliance is coming out in a very big way. So when big, elephants come into the play, then definitely it will be more heating up of the competition. So either you should have a valuation comfort or you should have a great business visibility. I think both seems to be compromised as of now. So we are, now totally staying away out of this the solar module manufacturers and the solar cell and wafer place.
Okay, for now, giving the listed stocks, Waaree pass. because of increasing competition from big companies coming through. Quick word, Meesho IPO opens tomorrow. They're looking to raise about 5,500 crore. Your analysis, should retailers look to participate in the IPO?
No, Riba, we have a neutral rating on this company, and we are not subscribing. We are not advising our clients to subscribe for this IPO because, again, the valuation problem is there, the profitability problem is there, and it's more of a far-fetched outside kind of a scenario. Any stock which is coming like that, companies which are coming for listing like that, in this environment, we are totally avoiding that.
Thank you for joining in, Dharmesh. Great chatting with you as always. Get into a break. On the other side, Mithun Aswath of Kiva Advisors will join in. The Nifty for now is under pressure, down 165 points, but holding on to 26,000. Welcome back. You're watching Closing Bell. It's time now to talk about individual stocks in the news, reacting to big, moving actually on very large volumes. Hormis is now here to tell us more.
The markets are sulking, but there are certain names that are not. And we spoke about Prostam Infosystems just a couple of days back on Bazaar, and the stock continues to move higher today as well. And it's 15% higher in today's session. It's gained in 5 out of the last 6. And in these 6 sessions, the stock has moved 33%. And today's volumes, of course, the highest on record. More than 4 crore shares have been traded now on Prostam. The 20-day average is just around 12.5 lakh shares. And the stock now has nearly doubled from its IPO price. 105 rupees was the issue price. The stock now at 205. And it's an important day on Friday because the shareholder lock-in period ends on the 5th of December. It's not November, it's December. And of course, the spark is the next one. A news-driven reaction, 20% upper circuit today for the stock. The favorable court verdict coming in, highest volumes on record here as well. Close to 3 crore shares have been traded on Spark today. The 20-day average is 3 lakh shares. And the stock now has very convincingly moved above its 200-day moving average of 145.5, but has been a bit of an underperformer this year, down 25%, was down 30% last year as well. Now, AkzoNobel has made a move on the upside today, and the move majority of that move has come just in the last couple of hours. Snapped a 3-day losing streak today. Volumes have seen a very sharp spike after 1 o'clock this afternoon, and close to 6.5 lakh shares of AkzoNobel have been traded. The 20-day average is only 46,000. That number is only going to keep going higher because the stock on last check was up 10%. Now it's up 13%, and it's broken above all of its key moving averages and has also now turned positive for 2025. And lastly, Websol Energy, the biggest single day gain that the stock has seen since December of 2021, 12% higher on the stock today. Before this move, the stock had declined in 11 out of the last 13 sessions. The announcement came in today that it's going to explore PV ingot and wafer manufacturing in India is Websol Energy, and 5 crore shares have been traded on the stock since this announcement came in this afternoon. The 20-day average is around 45 lakh shares, and the stock has had 4 straight months of losses and now trading with gains of around 12%.
Okay, all right, Hormuz, thanks very much for that. Well, Mithun Aswath is with us of Kiva Advisors. Mithun, good to have you here. You know, it's a tough-looking screen. It has been a tough-looking market, even though for a market which hit a new 52-week, new all-time high. But actually, even on that day and the subsequent couple of days, number of stocks hitting 52-week lows is 2, 3, 4 times the number of stocks hitting 52-week highs. And that basically tells you the state of affairs. So tell us a little bit about what you're doing, and, you know, everybody's nursing portfolios which perhaps are a little sideways to sharply lower, at least for some. So give us a sense of how you're handling it.
Yeah, good afternoon, Prashant. I think what you're adhering to is mainly, I think, maybe on the small and mid-cap side, where there has been a lack of participation, and several of the companies may have, drifted lower. However, I think this is a market where, valuation, earnings visibility also are becoming more important. So one needs to really look at spaces which may have been bottomed out, and there is a reasonable earnings visibility, and money could attract, those pockets in the near future. On the mid and small cap side as well, I think there are several companies out there where, the opportunity for growth continues to be there. And post this correction, I think quite a lot of opportunities will open up even on that side.
Mithun, we were just discussing a company like KNR Construction. It's gone through a rough time. Its market capitalization is about 4,500 crore. In FY25, the bottom line of the company was 1,000 crore. If you take the 12-month trailing profit, it comes down to about 480 crore. Now, they were disbarred from participating in a few projects, etc. So it's gone through a challenging time financially, but the stock has corrected a lot. So,
by the way, just one point. So the promoters that said they will not participate in NHA orders till November.
Okay.
So November now. So I think that perhaps has passed. Yeah. And that perhaps is the reason why second quarter looked, because they did not participate.
They didn't participate. The top line went down 66% in Q2. Yeah. So I'm saying there are a lot. You were talking about finding value in beaten down stocks. Have you looked at anything in this infrastructure construction space, sort of forgotten?
Yeah, Rima, actually, something, we kind of like where there is reasonable cash flows. Also, where there is maybe even a dividend yield supporting downside. So I think some of the metals stocks that we had talked about earlier have done quite well. They've held up. Things like Vedanta have done reasonably well in this sort of an environment. But one pocket which looks interesting to us is maybe the IT services space. The large cap stocks in the IT services space have gone through a reasonably long time correction. There are obviously worries on what will AI do to their business. But having said that, I think the opportunity size, even for the IT services companies on the AI side, will be quite large. And we have the leaders there. I don't need to name them. You just look at the top 2, 3 large cap stocks. They're all trading at about 20 times earnings, and I think the leader itself is trading at a 4% dividend yield. So these stocks remind me of something like when ITC was battered and bruised post-COVID. It was trading at about 4-5% dividend yield, but nobody wanted to touch it. All those issues about ESG and whatnot. I think the IT sector is similarly placed. I think 12 months from now, I think it could be quite different.
Okay, so you would bet on the TCSs, Infosys on the world, large cap IT over mid cap IT stocks like a Persistent, Coforge, where growth rates are higher.
Yeah, I'm just saying, Rima, nothing to be against say a Persistent or the others. I'm just saying that companies like TCS seem to be really attractively valued right now, and even if they were to eke out 8 to 10% growth with a 4% dividend yield, I think the stocks are trading quite attractive.
Any other pockets of interest, value, according to you, where the risk reward looks favorable?
I think this is one which is quite glaring to us, but there are several pockets within the small cap space where companies have gone through some sort of issues, either because of the tariff or some other one-offs, and have been beaten down. And that's some pocket that we are looking at. Obviously, these are more illiquid spaces of the market. So we are trying to focus on areas where we can deploy reasonable capital. So the larger cap ones where we are seeing value. One is obviously IT. Apart from that, even some pockets on the metal side also look interesting.
Mithun, give us some names with the caveat that you are studying these companies. That it is not a stock recommendation, but it's of interest to you. I'm putting that caveat on the table.
Yeah, I think Surabhi, we're still in the process of evaluating some of them. Like I mentioned, I think I talked about TCS as one which looks quite attractive to us at these levels, and the large cap IT space. Apart from that, what
in
we
mid and small
about,
caps. You said mid and small caps.
Like I mentioned, we're still in the process of evaluation. It won't be right for me to throw out names, but what we've spoken about even earlier, things like the textile space. We spoke about it last time as well. A company like Arvind Limited, I think is very attractively valued. Despite the tariffs, the company posted reasonably healthy numbers in Q2. And if we were to get some sort of resolution on the tariff, these companies would definitely get a leg up. And valuations are not very rich even in companies like that.
Okay, all right. Mithun, interesting. Good conversation as always, and we'll look out for the next one. By the time, probably more ideas would be on your table. Thank you for joining in today. By the way, while we were speaking with Mithun, the Nifty for a moment slipped below 26,000. Pull up State Bank of India. That's the latest one that is adding to the downside pressure. Anyway, all of banking is weak. SBI is also slipping as we speak. So it's tough going, still about 160 points lower on the Nifty. And pull up the currency. There's no major pullback. The rupee continues to hover around levels of 89, 87. That's where I think it is right now. Yeah, 89, 87. So no major respite on the currency either. We'll do one thing. We'll take a quick break, come back on the other side, and we'll get you some final trading calls with our technical experts, and then back with more stock ideas. Welcome back. So, the market's still under pressure. Let's figure out what's happening with the Tuesday expiry. How's that playing out, Mangalam?
Well, the market's currently at the low point of today's trading session, but there are data points that tells you that maybe in the next 15 to 20 minutes, we see some bit of recovery from the lows. Why do I say that? Because one, the Nifty, after breaching that 26,000 mark, has now gone back a little above that. So that's, the first rule of the thumb. Even as the Nifty Bank and Midcap Index are underperforming, we've seen some action at the 26,000 put and the 26,050 call. Now, typically, with the market having fallen about 150, 160 points, you would see the 26,000 put be in the green, but that's actually turned into the red, and with a lot of open interest backing that, that's telling you that maybe the street believes that this is a place where the market will find support. The other part is the 26,050 call. Still equally active in today's trading session for a premium of 1.5 rupee. It would make sense for someone to, be punting that on the long side rather than the short side. So that's something that I'll be watching out for. And alongside all of this, even with a big decline in the market, the India VIX has actually come off the high. So the India VIX right now is marginally in the red with a lot of punts made on the long side towards 26,050 and support around that 26,000 mark. The India VIX is down 3%. From today's high, it's down about 6%. And finally, the put call ratio as well, which has moved lower from 0.9 to around 0.8, telling you that the market is slightly oversold, at least as far as the expiry is concerned. So the next 15 to 20 minutes, if the market does show signs of recovery, we'd know why. Otherwise, we'll see a bigger gash, and that would be towards the 25,900 mark, which is around the 20-day moving average on the frontline index.
Okay, all right, got that. Mangalam, thanks very much for the latest update from the F&O market and the cues that we can pick up over there. With that, let's go to Mitesh as promised for some final trading calls. Mitesh, what are you working with?
So I think, again, the market hasn't recovered as we approach the last half an hour. So we've had both buys and sell calls, and I think we'll continue with that approach, keeping some long positions and some short positions because one, the broader trend has reversed. This still looks like a pullback to me. So earlier I had Cyient in the day as a buy call. Now I would recommend a BTSC there. Keep a stop at about 1164. Look for a target of around 1195 to about 1200. Most likely to be hit by tomorrow. And on the negative side is Havells with a stop at about 1432 for targets of 1405.
Okay. All right, Mitesh. Thanks very much for all the advice today. You have a good evening, and we'll connect again with the market tomorrow. For the time being, let's put the spotlight on what has been the biggest story of the last 24 hours, and that is the Indian currency's downward or southward journey. And that's actually continued today. There's been hardly any respite even as we speak. The rupee is still very much around those low levels of 89, 85. The reasons we all know: negative sentiment, FPI selling, the lack of visibility on the India-US trade deal, and the RBI not intervening in any aggressive manner in the market. Lata has more perspective on this. Over to you, Lata.
Well, first the numbers, 89.50 overnight. And now 89.95, so pretty close to the 90 mark, about a 40 paise fall or a 0.4% fall. Could become even a 0.5% fall. The slide is, the reasons are not new. The reason why the rupee has been the worst performing currency and why it has fallen with some accelerated pace since mid-November are both the trade deficit and the capital outflows, the capital account deficit. From November 18, the fall has accelerated because that day we realized that the October trade deficit is $41 billion, which means the US trade deal is now beginning to bite. The fact that the trade deal was not signed all through November has kind of accentuated tensions or at least worries within the exporter-importer community as well. And those who have open positions or those who had to buy dollars, importers, are now rushing in to buy, which explains the accelerated fall in the rupee. What we hear from dealers today is that the Reserve Bank doesn't appear to be supporting any level. It is just, graduating the fall so that probably a market-determined cheaper rupee will correct the current account deficit, the trade deficit to some extent. It will make the Indian exporter more competitive and it will make imports more expensive and thereby protect domestic industry. So it's just allowing the rupee to find its level, but only graduating that fall. An important positive that many dealers pointed out, or at least a few dealers pointed out, is that it's not the Reserve Bank alone which is applying dollars. closer to the 90 rupees per dollar mark. Even exporters, others are supplying, giving the impression that the market itself feels that things have gone far enough. So the hope is that around the 90 mark, the rupee will have seen a bottom, at least for the near term. But who knows, I could be speaking too soon.
No, absolutely. Asian Paints is what we're going to talk about next. The stock is higher today. UBS has upgraded their view to neutral from a sell. Mangalam is standing by with the rationale. 3% actually today now. Mangalam, take it away.
The stock is the top nifty gainer in an otherwise wobbly market, and that's after a brokerage note that has come in. In fact, it's the third or fourth brokerage note in the last 2 months which has seen an upgrade from a neutral stance or perhaps a negative stance. Asian Paints, UBS has upgraded from sell to neutral. They've also raised the target price from 2,100 rupees all the way up to 3,200 rupees. And they've said that the second quarter volumes, the second half outlook looks fairly bright. And the peak of disruption cycle perhaps is over, and they are expecting a 12% sort of growth coming by, which is the 15-year CAGR that the company has shown. However, they flagged 3 scenarios as well. One, competition continues with structural growth moderation for Asian Paints, but margins are not impaired. This could drive earnings growth to around 12%. And if growth moderates and margin pressure continues on intense competition, their downside case is around 2,400 rupees on the stock. And finally, an upside valuation. If competition comes off and margins improve, their base case, bull case is 4,000. So 4,000, 2,400 and 3,200 are the 3 prices or target prices, basis scenarios that UBS has for Asian Paints. In fact, we spoke to the management, and in an exclusive conversation, the management gave us a peek into what lies ahead for them.
Even now, while you are seeing some shoots in terms of the demand, we are not seeing that there is belligerence, there is full exhilaration coming into the market to that extent. We feel that today the rural markets are just coming back, even the urban centers are just trying to show some spark. I feel that possibly it will take some time before we really get onto the parameter of really double digits and so on and so forth.
How long will it take?
It's very difficult to say, but I would say that possibly another 2 quarters is something we need to kind of watch out for sure in terms of what we are looking at. So therefore, right now, I think the whole peg is in terms of saying that we continue to grow higher than the market, and that's the pitch in terms of what we would take.
And you haven't been doing so for the last few quarters, and now you're confident of doing that, right?
The first 2 quarters of this year, we have grown higher than the market to that extent. And as you look at the H1, we have grown much higher than the market overall.
So you will continue to gain market
That's
share?
absolutely.
50,000 crore revenue on Asian Paints, by when?
Okay, definitely for the next 4 years.
In the next 4 years. Amit Singhal stays in Asian Paints for the next 5-6 years at least?
I think from my mindset, eternally.
One piece of advice that you would like to give some of your competitors?
The advice is that when you kind of operate in the market, okay, operate with a certain value, a certain ethic, and look at possibly differentiating yourselves far more strongly rather than being me too in terms of the market.
And to the investors, what will you say, who've been sitting on 2 years of losses?
I think the investors will see that this is a brand which they will have to watch out for, because there are lots of things which are coming, and we think that possibly we have our clear eyes on the stakeholders and we will give them a good return.
Asian Paints has made quite the comeback over the last 2 quarters at least, growing faster than the market, and that is the endeavor. You can catch the full conversation later on in the evening, 5:30 p.m. and 7:30 p.m. only on CNBC TV18. Well, the other big mover today is Wockhardt. In fact, yesterday it was up 20%, and even today in a sluggish market, it's holding up in the green. 1.8% up now on Wockhardt. We caught up with Habil Khorakiwala, founder and chairman of Wockhardt, where he shares that the approval of Sensex is expected to come by middle of next year from the US FDA. He also adds that Sensex should record $1 to $2 billion of peak sales globally. Listen in.
For the first time for us and for India, a new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US. So it is only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product. This drug has proved a remarkable efficacy and safety, because one of the important things in antibiotic is normally not given for a week or two. It was given longer time because the patient came at a very last stage. Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide. US generally contributes 40% of the global market. So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Okay, well, that's walk hard for you. Stock was up about 6.5% at one point. It's, of course, given back bulk of those gains, just about 1.5%. Of course, yesterday it saw that 20% massive move. Jay Bala is with us of cashthechaos.com. Jay, good to have you here. Thanks for joining us. So will the 20-day go on the downside? What's your sense? You were a little more constructive the last we spoke, Jay.
Yeah, hi Prashant. Yeah, the market's short term has become a little bit, here and there. The fact that the markets haven't been able to follow through on the fresh record high tells that the markets are waiting for some sort of pullback before the actual move actually comes through. But the fact that the markets have registered fresh all-time high, that's a bullish sign. It might just, the big move that usually comes with the fresh record highs, that may get slightly delayed. The key level to watch out for is 25,840 on the Nifty. If 25,840 were to go through, I would expect the Nifty to go somewhere close to the August low of 24,400 and then launch a fresh attack on the all-time high. So, but the short point is that very short term is getting hazy, but there is no change in the outlook somewhere between March to May 2026. I'm expecting 29,000, which I continue to expect.
March 26. March 26, right?
March 2026. So that's about, say, 4 months away. So if the markets were to drop below 25,840, this scenario of markets going closer to the August low will come up. And then we are expecting fresh record highs to come in the calendar year 2026.
So first we go to the August low of 24,400 or first we go to 29,000?
Yeah, that's the thing. That's the reason why I've given 25,840. So until 25,840 is not broken, we can anticipate fresh record highs to come through now. Okay. But if 25,840 were to get broken, then the scenario that 24,400 is coming first, and then further record highs to 29,000 is coming much later on. But if 25,840 were to hold and not break, we can still anticipate fresh record highs and the follow through for the break of 26,277, the September 2024 high, to come through now itself. So watch out for 25,840 is a very important level.
Okay, that's the line in sand. What are the stocks, Jay, that you're looking at where you are observing interesting patterns?
Yeah, we need to get much lower on our allocation because we are at crossroads. So with that in mind, take these two stocks. I have one. The first one is on the cement space, Ramco Cements. Ramco Cements is seeming to put in a double bottom around 960, 965. So it has upside potential in the short term about 1160. The second one is a continuing trade on Maruti. I've been bullish on the auto space since July. And I'm continuing to see Maruti scale fresh all-time highs. But again, you got to be a bit more measured in your approach here because it's run up quite a bit. And the auto sector also has done quite well. So allocate much lower. Long Maruti around 20 with a stop loss of 15,500 with an objective of 17,200 to 17,400.
Okay, so Maruti is a long. On financials, Jay, what are the trades? Because that's, most of the financials, that's been the best performing part of the market, right? Starting with Bajaj Finance itself. Would you look at this dip to buy anything where you still see momentum, or is it a time to start taking some profits on a trade that's worked very well over the last few months?
Yeah, looking at it from a medium term and a short term perspective, the fact that HDFC and ICICI are not participating, and HDFC Bank in particular looks like it might be causing a double top, that's raising a bit of concern. But from a sectoral perspective, as long as the banking sector stays above 57,629 from a medium term, the overall view for the banking sector and the financials remains bullish. So watch out 57,629 on the banking sector. The index resistance at about 61,000, and the supports are about 57,500 to 56,737.
Jay, stay with us. We're going to take a quick commercial break here. Come right back and continue this conversation. Stay tuned.
Welcome back. While the Nifty is defending that 26,000 mark by the close of trade, the Nifty Bank continues to grind lower. And now it's down close to about 400 points. Pull up that intraday chart on the Nifty Bank. The sell-off has accelerated in the last 30 minutes. And heavyweights like ICICI Bank, Axis Bank, HDFC Bank, all down over 1%. So this reconstitution of the Nifty Bank to reduce the concentration risk of names like an ICICI Bank, HDFC Bank, weighing on the sentiment today. Jay, you want to come in on these large cap banks?
Yeah, it definitely is a cause of concern for the overall Nifty's trend and as well as for the banking sector. Axis Bank within the private banking space is doing pretty well, but ICICI Bank has been clocking lower lows and lower highs. that's not an encouraging sign. And the fact that HDFC Bank is struggling around 1020, it has potential to be a double top or triple top if we were to go below 940. So these are pivotals, and they need to reverse this negative potential. So far it's just a potential, and I would be more concerned if HDFC Bank were to drop below 920 more than ICICI. The markets have been managing to do reasonably well, even with ICICI's weakness. But two heavyweights, trending negatively will cause a little more negatives for the overall market. So these are the key stocks, and the key level is 920 on HDFC.
Okay, so these three large banks, ICICI, Axis, HDFC Bank, exerting pressure. But outside of that, heavyweights like Reliance Industries, L&T, ITC, also weakening in trade, and these stocks are down approximately close to about 1%. Jay, rupee, that's taking all the headlines, continues to hit newer lows. Do you want to tell us in your assessment where it's headed?
My long-term forecast for the rupee in 2019 was for the rupee to get to about 93. But the intervention that happened for the rupee during the Governor Shaktikant Das's time looked like it might have put a lid on it, but it looks like the original trend is in place. But from a long-term perspective, rupee is on its final leg of weakness. It could top out or it could bottom out somewhere about 91 to 93. So watching it pretty closely. If it were to print 88.9 and then go back to fresh low, then that's a very good sign from a long-term perspective. So the long-term call is that once 93 or 91 to 93 is done, the rupee is set to strengthen on a secular basis for about 5 to 7 years. But we still have fresh record lows likely to come through in the short term. So and it could also be for the next 3 to 6 months, maybe even a year. So it's the long term is looking encouraging, but we have possibly new lows coming in the short term.
You're actually saying that we'll see after these lows appreciation for a few years.
That's right. It could be as much as 77 to 72 to the dollar, but that's a 5 to 7 year forecast. But first we need to not lose sight of the possibility that further lows somewhere about 91 to 93 is coming. Post that, that it's likely to be a secular strengthening move for the rupee. Now we are looking, if you understand a bit of Elliott waves, we are talking about the fifth of a fifth for the rupee from 1974.
I see. 91, 93 is already almost there, Jay. It's not very far away. So we'll see. What about the global scene, Jay? What's your sense on what's striking, if anything at all, to you?
Yeah, the US equity markets have possibly bottomed on the 21st of November or got one more low below the 21st of November. The broad point is that the market's movements from the October highs is a corrective decline, and sentiment for the US markets isn't supportive of a major decline from current levels. So if we have to see one more low below the 21st of November's low, and that will be a final low for the US equity markets. It's already bottomed here, and it's heading to if you take the broader S&P 500, it's possibly heading to 7,400 with or without a new low below the 21st of November low. But so basically, I still remain bullish on the US equity markets, same like the Indian markets.
Okay, so that's how things are shaping up for the currency, for the dollar. For the Nifty, by the way, as we start today's recap, Jay, thanks so much. Just, give us a couple of minutes. We'll, start wrapping up the day. For the Nifty, I guess the Tuesday expiry has been a bit of a saving grace because it's forced at least some of the shorts to cover. And we've seen that build-up happen at just around the 3 o'clock mark. So some recovery from the lowest point. Otherwise, at one point, the index had slipped below the 26,000 handle as well. Okay, so let's see where the pain points were. Actually, pretty much all across. Financials were definitely weak. ICICI Bank, Axis Bank, HDFC Bank. These are some of the big stocks on the way down. Beyond the financials, you've also got Reliance and L&T, so other big boys as well, facing the pressure today, down about 1% on both Reliance and on L&T. ITC has lost about 0.8%. And some of the metal counters came in for profit-taking as well. That would include names like Hindalco and JSW Steel. Interglobe Aviation is the weakest stock on the Nifty as we're closing out today, down 1.5%. Now, on the flip side, there's Asian Paints, up 3%. Dr. Reddy's, Maruti and Bharti Airtel are some of the other names that have managed some gains. Lever also on the upside, and some buying in large cap IT, Infosys, Tech Mahindra, TCS. Not too much, but they've all managed gains of, a couple of rupees here and there. So that's the picture. But yeah, definitely a weak day, but not only for the large caps, Rima, even the mid caps. No great shakes today.
No, the mid-cap index is ending with a cut of about 0.2%. The big drag is Bajaj Housing Finance on the back of the large block deal where the promoters, to comply with the minimum shareholding norms, probably have sold some stake. So off for sale there, stock down. Other losers include some in the banking pack. So you had a Bank of India weak in trade, 1.25%. Sale was subdued. On the way up, Spark, positive regulatory news, stock locked in an upper circuit of 20%. HCC, rights issue of 1,000 crore. The record date is 5th December, so seeing some buying ahead of that. Prostram saw very, very large volumes. I think volumes were close to about 1,000 crore in terms of a total value. Vodafone Idea, investors hopeful of an AGR relief maybe by the end of this calendar year. Yes Bank could be a beneficiary, could see inflows on account of the rejig taking place in the weightages for the Nifty Bank. So Yes Bank saw some buying. Physics Wala was grinding lower for the last couple of days, but has bounced back. All in all, the advanced decline ratio was negative, 1:2. But Prashant, the big headline was rupee once again, and that dragged the markets lower. So it's a soft close.
Not 90 yet.
Not
right?
90.
So maybe a bit very, very close, of course, got to 95. Just 5 paise away from the 90 odd levels. Tomorrow, of course, is the, I think, issue opening of Meesho. That's the other big story which we will track. We have the management join us tomorrow morning as well. Apart from, of course, everything else we will track. It's a wrap on this edition of Closing Bell. From all of us here, goodbye. Thanks for watching. Markets forward. We'll pick up on all the action. Jai Bala, of course, stays on. Stay tuned.